Excel accounting practice problem, deposit form. Get ready, because we're about to excel with Excel. Here we are in our Excel worksheet. If you have access to the Excel worksheet, would like to follow along, 2 tabs down below, example and practice. Example tab in essence being an answer key. Let's take a look at it now. The worksheet here is something we put together from a blank worksheet in prior presentations. Now it being used to record transactions related to a deposit type of transaction, meaning we got money that's going to be going into directly the checking account as opposed to other cash accounts like the undeposited funds. If you were to use accounting software such as QuickBooks, it might be done, or you might see then a form like this, which would in essence be a deposit type form, which typically would be assigned to a checking account, meaning it's going to go into the checking account as opposed to other cash type accounts like possibly undeposited funds. And then the other side here might be coming out of, in this case, undeposited funds, or there could be other things, of course, that we're using the deposit for, meaning the deposits usually, hopefully, ultimately, are coming from the customers, and we're finally getting the inflow of cash from the customers through the revenue cycle. But it could be that we, the owner, put money in which case we would have to choose an account down here, being the other side, like an equity investment account or something like that. Or we might have gotten money, say, from a loan or something like that, in which case we would choose another account down here for that instance as well. Also note that when we have the receive payment form, this is another type of form, the second form, as we've seen in prior presentations, related to the accounts receivable cycle or revenue cycle after the invoice, receiving repayment on the invoice. We, by default, put this into undeposited funds, usually, as we saw in the prior presentation, and then try to use that undeposited funds to group the deposits in the deposit transaction going into the checking account in the same format that they will be seen or grouped on the bank statement, helping us to reconcile. However, we can use this form to make the deposit directly into the checking account. Therefore, if you're looking at checking account increases, they might be done, usually should be done generally with the deposit form. However, you might also see the receive payment form that is using the direct deposit into the checking account as well. Now, if I was doing this in a process in like QuickBooks, usually also one more thing to point out, that if these deposits were from, on the deposit form, or going through undeposited funds, I then would generally use this deposit form to help me with my grouping of the undeposited funds to put them into the checking account in the same grouping as they will appear on the bank statement. However, if there are other deposits, or if I don't have this problem of grouping properly, combining deposits together, then you might just enter the deposits directly into a register, as you could see down here, looking similar to if you've ever used a standard kind of check register information. You might have a register like this, and you can also enter the deposits directly into the register, into the deposit column. Okay, so now understanding that, we're going to go up top and we're going to record some transactions, and one of them is going to be similar to what we saw before, the accounts receivable cycle, making the deposit with the deposit form, and then we'll think about going through undeposited funds, and then we'll think about other kind of deposits. We'll do this fairly quickly because we're going to repeat some stuff. We got a lot to do, and because we're getting hopefully better at this Excel thing. All right, so we're going to start off with a full accounts receivable type of cycle, the transaction related to us entering an invoice, and then we're going to have the receive payment, which we're going to deposit directly into the checking account. So this is going to be 315. We're going to say 315. We're going to start off and we're going to say that we've got accounts receivable. We're imagining an invoice. We did work. We're billing the clients. That means the accounts receivable is going to go up. Sales is going to go up. We're imagining it's not inventory, but simply service items. This would be our invoice going out. So this would be the 1600. We saw this in prior presentations, so I'm going to do it fairly quickly here. We're then going to go to the Home tab, Alignment, Indent. That would increase the accounts receivable, so I'm in H6. This is going to equal then the 1,600. Other side going to Sales, which is going to be down here in Sales. This equals the 1,006. Accounts receivable going up, sales going up, net income then going up due to the sales going up, even though cash has not yet been affected. Let's bring this on over to the general ledger. We're going to record the accounts receivable in the GL, which is the third account in the general ledger. We've got on 315 in cell P17 equals left till we hit the wall, up to get to that accounts receivable. We're increasing that 2,000 to 3,600. That then matching the trial balance out of balance by the 1,600 till we record the other side. The sales, which is our first income account, same ordering in the GL. So we got our assets in green, liabilities in orange, dark blue, the draws. There's our sales. So we are here, we're on 315. We're in cell AJ5, which is going to be equal to, scrolling all the way to the left to the wall, the sales are the 1600, bringing it up to that 2016 as we saw before, matching out, back in balance, looks good. Now we're going to record this accounts receivable also to the subsidiary ledger, which is going to be subordinate to the general ledger for accounts receivable, way to the right over here, imagining it's customer 4, 315. We're in cell BD17 equals left to the wall, scrolling up, and we're picking up that debit of 16, which is in cell. You could just hit equals C2. And if we add up our 4 receivables, that adds up to the 3,006. That matches what's on the trial balance. So that looks good. Now we're going to say the receive payment. So this is going to be a deposit kind of activity, but we're not using a deposit form, or wouldn't be in QuickBooks. This is one instance where you'd use something else like a customer payment that would then be assigned to make the deposit. Therefore, when you look in the checking account, increases in the checking accounts usually being indicated with deposits may be seen through this form, customer payments, if instead of going through undeposited funds, they're taken directly to the checking account. So we're going to say, all right, that would happen. Let's say 325, we're going to get paid now. We're not going to put it into undeposited funds because we don't have a grouping problem or issue, and we're just going to put it directly into the checking account because we expect in the checking account this thing to show up on the bank statement as a deposit of 1,600. Therefore, no added other grouping is necessary for our bank reconciliation. There's our debit and credit. The credit is going to be accounts receivable. And so there it is, straightforward transaction, most likely the transaction that you would see in normal accounting courses that aren't software courses. But this item up top simply being cash, usually generic cash instead of checking account. So this is going to be an increase to the checking account, 1,600. We got that increase into the 1016. Accounts receivable, something's in it, so I'm going to double click on it. I'm going to say plus. We're going to post that 1006. So now in accounts receivable, it went up and it went back down. Let's post this to the GL now, to the general ledger. We're going to go to the right to do that. We are in cell K5. This is on 325. And then in cell L5, this is going to be equal to the 1,600, increasing it to 1016, matching the trial balance. We're out of balance on the GL by 1,006 till we record the accounts receivable, third account on the GL. Scrolling to the third account on the GL, there it is, 325. We're in P18. It's going to be equal to, left to the wall, scrolling up, and we're picking up that 1006 credit now, bringing us back to that 2,000 that we started with, that matching accounts receivable here. We're back in balance here, but we also have to record that transaction on the subsidiary ledger, breaking it out by customer. So we're going to go all the way to the right to do that. We're down here in customer numero cuatro. That's my Spanish for number 4 right there. Impressive. We're going to say this equals in BD 18 all the way to the left, to the wall again, hitting our head on the wall again. And then we're going to basically pick up that 1,600. And so we're going to say there it is, back down to 0. These 4 customers now adding up to 2,000, matching what's on the trial balance. And there's our first round. Now this one, I'm going to highlight this one because this isn't really a deposit form. Again, that's going into the checking account. I'm going to make it a different color, but we're using like another form for the deposit, which is a little bit different than a deposit form, but it's still an increase to the checking account. Now we're going to do the same process, but put it into undeposited funds, and then use the deposit form to put it into the checking account, which might be used if you have multiple deposits that are going to be grouped together, or multiple payments that need to be grouped together in some way other than just the one payment, and so that you can match out with the bank statement. We're imagining this happens on 410, same starting point. We got the accounts receivable, we got the sales, but this time the amount we're going to say is 1,400. 1,400, indenting the sales, same starting point, so we'll record this fairly quick. I'm going to start using F2 on the keyboard to practice the keyboard. So here's the accounts receivable. There it is, something's in it, even though it's 0. So I'm going to say F2 on the keyboard. That's like double clicking on it, then plus, and then F2 so I can then scroll down. Wow, I didn't even use the mouse like at all. It's amazing. That brings it up to 3,400. And then we're down here on the sales and revenue. Let's see if we can repeat the F2 magic. We're on cell H15, F2 plus F2. And people are like, you're not even using the mouse and you're going rapidly. So then if we look down, then we're back in balance down here. And then that's going to have an impact increase in, of course, our net income as sales or revenue was impacted. Now let's record it in the GL, accounts receivable first. Go into the good old AR, third account. We are in O19. This is going to be 410, tab, equals, in P19, left to the wall. Boom, hit the wall again. 1,400. So now it went up again from the 2,000 by the 1,400, imagining an invoice, in essence, transaction. That 3,400 also being what's on the good old TB, out of balance by the 1,400 till we record the second half to revenue, which is our first income statement account. GL in order, assets green, liabilities orange, equity dark blue, revenues over here in AI6. We're looking 410. Is that what we were doing? 410, I think. So hopefully I got my dates right. This is going to be equal on AJ6, left to the wall. Boom, hits the wall. And then we're on that 1,400, enter. There it is, bringing it up to 203 on the sales. GL back in balance with the green zeros up top. Sales 203. We also need to hit the AR subledger for that 1,004 all the way to the right to do so. This is by customer. Looking for the stuff by customer. Let's say it's customer 1 this time. Already owes us $1,000, but we sold them more stuff. I trust customer 1. They're going to pay us. We could sell them more stuff. We're in AZ5 equals. We're going to go left to the wall. And then we're going to be picking up that 1,400 once again. So we increased it from 1,000 to 2,004. Total of our 4 customers adding up to 3,004. That ties out to the trial balance. Looks good to go. So let's do that. Let's go then, because we're good to go. So I'm not going to just sit here when we're good to go. I'm going to go. Okay. So then the next thing that happens is we're going to say that we got the receive payment form, which would look something like this. But this time we're going to do what the default is, kind of like in a QuickBooks. We're going to use this item to receive the payment from the customer, putting it into undeposited funds, meaning we're holding on to like cash, and then we're going to deposit it into the bank, possibly grouping multiple receive payments at the same time, it then showing on the bank statement as a grouped number, which we want reflected on our books, so that we can reconcile with the bank reconciliation. So this happens on 4/15, and so we're not gonna put it into the checking account, but undeposited funds, which is a type of cash account, even though QuickBooks puts it under a type like other current assets for various reasons we'll talk about later. I won't get into it now, but it's in essence a cash account, holding account, clearing account, you might call it. Should be back to 0 shortly after you make the deposit. The other side, then it's going to go to the accounts receivable. And this is going to be for the same 1,400. 1,4. Here we go. And then we're going to the Home tab, Alignment, Indent, Undeposited Funds, now going up. Here's undeposited funds on the TB. This equals the 1,400. That increases here. That indicates like a clearing account. We should either be holding on to the checks or having credit cards that are grouped that we got the money, but now we want to group it in some way as we then transfer it into the checking account so that we can then group it in the proper format that it will be matching the bank statement. Accounts receivable. Let's do this with our F2 magic trick. Up top, we're in cell H6, F2 on the keyboard plus F2. And then scrolling down, no mouse usage, no mouse usage. No impact down here on the net income of that transaction because we recorded the income when we had the invoice. Let's go ahead and put this and post it. Posting it, it's sometimes called, to the GL, undeposited funds, second account. Scrolling to the right, undeposited funds is going to be here. This is on, what was the date on this one? This is on 4/15, I think. Equals left to the wall, undeposited funds going up by that 1,400. Now we're out of balance by 1,400, and we got 1,400 matching the TB, trial balance, not tuberculosis, trial balance. We like TB. They stand for trial balance. Accounts receivable then is the third account now. Accounts receivable, third account, is going to be 4/15. And then we're going to say in P20, this equals left to the wall. Boom. And then we're going up to that 1,400. So that brings us back to that 2,000. So that looks good. And then we're back in balance up top. 2,000's matching the accounts receivable. But we also need to take it on out to the subsid ledger, the subsidiary ledge. So we're going to go all the way to the right to do that. This customer number 1 paid us that 1,400. They still haven't paid us that 1,000 up top, the beginning balance, but whatever. They paid us this one, so we'll put that here. 115, we're in cell AZ6 equals left all the way to the wall. We got a good head of steam and boom, head right into the wall. And then we're picking up that 1,400. So there we had 1,000. And then it went up by 1,004, down 1,004, back to 1,000. The total of our 4 customers adding up to 2,000. That then matching the trial balance. Back to the TB. TB now has that 2,000 in it. So now we got this money in undeposited funds. And if that was the only check that we got, then we could have really put it right into the checking account and it wouldn't be a problem because then you would expect that to be the amount that matches on the bank statement. But if you got multiple amounts, like that was cash or credit cards or something, that you then grouped together, then walked over to the bank and deposited it as one lump sum, then the bank statement's going to show a one lump sum, and we want to match that to our books. That's what this clearing account does. Note again, this clearing account often a point of problems for people because they've never worked with that before because they've learned just a cash account and not having to deal with this kind of grouping issue. So you want to have a handle on that because that's going to be something that most likely people, will not fully understand oftentimes. So then on 410, we're gonna say that we made the deposit. This probably would happen basically on the same day, 415, because we should get all of our deposits and then put them right into the bank account. So let's just make it the same. This should be like 415, same day in essence. We walk to the bank at the end of the day and make the deposit. And so now we're going to increase the checking account and take it out of the undeposited funds. This is the moment we've been waiting for. This is the deposit transaction. So in QuickBooks, this is going from this customer transaction that went into undeposited funds when we received the payment after invoicing. And now we go over to the deposit form. Where did the deposit form go? Oh, here. Which would look something like this, making the deposit and the other side going to these undeposited funds accounts, which would be decreasing the undeposited funds accounts. So now we're going to go to that deposit form and use kind of like the transaction behind the deposit form, which would mean that the checking account's going to go up now by that 1,004, undeposited funds going down, undeposited funds, really a clearing account, not just a temporary account, it's a clearing account in that it should go to zero quite quickly after it goes up. It should go up and go right back down. These accounts down here are called temporary accounts because they will wash out at the end of the year with our closing process. So this is going to be cash checking account, then going up, something's in it. I'm going to double click on it, go to the end of it and say plus, point to that checking account, and other side undeposited funds, something's in it, double clicking on it, plus, taking it on down to 0. So that goes back down to 0. It has cleared out. There's the clearing account, goes up, goes down really quickly. So now we're going to say checking account on the GL. Let's take a look at the GL, otherwise known as the general ledger. On 415, it's going up with the check, and then undeposited funds over here is going down. That's in cell 06, also on 415. So we're in P6 equals left to the wall, and we're taking that down by the 1-4 back down, back in balance. So that's going to be the second kind of process. Now that's the normal kind of sales type of processes that you would have if you were to receive payments. You also might have a situation where you basically make the sale at the same time that basically you do the work. That's a sales receipt type of transaction. We'll talk about that in a future presentation, but that's another thing that could basically increase the deposit account. For now, I want to think about two other kinds of deposits that we might have other than ultimately coming from customers. One might be that we put money into the checking account. So let's say on like 5/15 that we, the owner, are going to put more money in the checking account to invest in our business. That means the checking account's going to go up directly, and the other side is going to go to something like an equity account. And this is the confusing component because, you know, we don't do that often. So you might ask, well, where should the other side go? It shouldn't go to income, because if it went to income, that would increase the income. We would be paying taxes on it, maybe if you're having an income tax. It should be going to some kind of equity account. We might make another equity account called owner investments, but sometimes people just put it straight to the equity account. And so that's what we'll do here. We'll just increase the equity account for it. And once you do that, you got to note, you're going to have to look at the GL and see that you actually posted something to equity, which represents an owner investment. Okay, so we're going to put it into the equity account, and we're going to imagine that we put in $10,000 into our own business. And what would be the impact there? We'd say, okay, checking account is going to go up. So I'm going to put my cursor on the checking account. Something's in it. Double clicking on it, going to the end of it, and I'm going to say plus, pointing to that 10,000 increase in the checking account. The other side then going to owner's equity. So here's owner's equity. This is going to be equal to the 10,000 increasing it in the credit direction. Notice there's no impact on net income there. That's the key. It should be going to an equity account. If you put it to an income account, then your income's going to look like you earned $10,000. You didn't earn it. We put the money in, and we certainly don't want to be paying taxes on that $10,000. Note that you could do that transaction with just simply a deposit form here, which would not be connected to the sales cycle, just making a deposit, the other side then being manually input to the account of that equity account. However, if I'm using it personally in QuickBooks and I have a deposit that I don't need to be connecting to, say, undeposited funds in this way, it might be easier. That's when I would just go directly to the check register, oftentimes enter the deposit manually into, in essence, the check register in this format, in the outer item here, going just directly into the deposit side. And if you were to drill down on a transaction that you entered into the check register, it might still then be generating a deposit form. So this is just another quicker way that you can do a data input. This happens to be a journal entry, but in any case, it could be a deposit type form. So then the next and final way we'll take a look at is that you might get a loan. So you might get a loan and get a deposit. So on 620, you're going to say, I need more money. I don't have the money. I can't put the money in, but I'm going to get a loan. So I'm going to say, all right, I got a loan. So I want to get cash. It's going to go up, let's say by 20,000, and then I need a loan. Now I'm also going to add an account here into our, because I don't have a loans payable. Let's practice adding an account. How could I add an account here and to my general ledger? This will just be Excel formatting. I could select these cells right here, just these cells, and I want to push them down and add the account right above it and make it that orange color. So I'm going to select those cells, right click on it. I'm going to say we want to insert, and then I want to shift these cells down And there's nothing underneath these cells, so it shouldn't mess anything up. So I'm going to say shift them down. And there it is. There's my next yellow line. I'm going to call it loans payable. And I'm going to say 0. And then this one's going to sum up across just the same way. And so there we have it there. The other side going to loans payable. Loans payable. There's our debit and our credit. I can enter this into the checking account up top. Double clicking the checking account. I'm going to say plus that loans, that checking account, 20. The other side now going into loans payable in H13 because we got money from a loan. Notice once again, there's no impact on the net income down below of that transaction as well. It wasn't income even though we got money because we're going to have to pay it back. So it's a liability. Let's record these two then to our GL. I'm going to do this one first. The second one we'll have to add an account, so I'm going to make this green so we could focus on it. Checking account here. That's on 415. Also 415. I think I wanted to make this 5. No, well, hold on a second. I made the wrong one green. I want to make this one green. And we're going to say, all right, now it's on 515. 515. This equals the 10,000. And then the equity account here is going to be the first or second equity. Assets, liabilities, equity on 515 equals, scrolling all the way to the left, picking up that 10,000. There, it's at 102.65 now, 102.65. So that matches out up top. And then we're going to also ungreenify that, record this last one. I'm going to make that blue again. Checking account going up by the 20,000. GL on 620 equals the 20,000. And then finally, I've got that loan payable. I'm going to have to add that GL account. How am I going to do that? This is going to be another kind of formatting issue. What I'd like to do is add a whole nother kind of my liabilities here. Now this is going to be a little bit tricky, so we'll focus in on this. We're going to say there's 1, 2, 3, 4, 5 columns. So what I want to do is add 5 columns first. I'm going to put my cursor on this column. 1, 2, 3, 4, 5. I want to add right those columns there, and I want to do so by pushing everything basically to the right. So what I'm going to do is right click on this now and insert. It's going to push everything to the right. It tried to copy the formatting of the cell right to the left. I don't want it to do that. So I hit this little paintbrush and I say clear the formatting. Don't format it like that, please. But instead, I'm going to copy these cells because that's the formatting that I do want. Control C, paste that right here, Control V, and there we have it. And I added one too many columns. So I'm going to remove this column, right click and delete that column. So now I've got these 2 other accounts. I'm going to change this account to be equal to this loan payable. And I can post to that loan payable now. So now I'm going to say this is on the 620. So we're in cell AF5 equals left to the wall, scrolling down. Going to pick up then that loan payable. So that increased. But I'm still out of balance on my GL because I don't have those 2 new accounts in this huge formula that's just picking up the ending balance of all of them. So I'm going to say go to the end of this, add then the ending balance of that GL account, which is going to be that 20. And then I'm going to add this other blank one just in case I populate it later. I've got this random account down here that I could delete, but I'll just add it in case I add something else to it later. And so there we have it. And that should then put us back into the green items up top. And that's us posting that out. And you can see how you kind of shuffle around the worksheet. Now we're also going to have an issue with the financial statements for 2 things. One is we got this loan payable, and 2, we entered something to the equity item, which often is done, but it can kind of throw things off when we focus in on the financials. Let's take a look at that real quick. So to do that, I'm going to hide all the cells so we can see the trial balance right next to our financials. So I'm going to put my cursor on column J all the way then to the financial statements on over to column CB, right click, don't delete, but hide those items. And you can see my financial statement is out of balance now by that 20,000. Now that 20,000 represents this new account that we created right there. I'm going to assume that's a long-term liability. So let's say it's a long-term liability and adjust this. We're going to say, let's make this then total current liabilities. And then we've got long-term liabilities. And that's just going to be this one item here, which is going to be this loan payable. I'm going to put that in the outer column, negative to flip the sign of that 20,000. Indenting this, we're going to indent that there. And then we can indent these two maybe for the full way. That gives us then total liabilities. Okay, I'm going to spell check it. Equals the sum of these two, underlining here. So there's our total liabilities, and now our equity is here, and liabilities and equity should equal the sum of just these two numbers now, and that puts us back in balance. Let's spell, well, before I spell check it, I got to fix that, but hold on a second. We also have the equity is coming out to the right balance, but it's not exactly right because this beginning equity is actually wrong now because we posted something to equity. So it's still in balance, but it won't tie out to the prior year because the prior year ending equity was 92.65, and now we've got 102.65. If we looked at the GL, we'd see the difference being that 10,000 that we put in as an owner investment. So we'd have to say, okay, this beginning balance is not quite right. It should be negative of, and you'd get this from the GL if you ran into this problem. It should be that. So it rolled over from the ending balance of last year, which is normally the same number over here because we don't usually post anything to it, but we did this time because there was an investment. And then instead of having draws, I'm just going to change this one to owner investment. The owner put more money in, which is equal to, and I'm just going to pull this from this middle column right now. You might pull it more properly from the general ledger, but I'm going to say the owner put money in of that 10,000. And I'm going to make that a positive, flipping the sign negative in front of it. Owner investment, making this a little larger. And then this now is an increase. So it's going to be this plus this. And that gives it to our 129,775. So there's the 129,775, which now matches up and ties into the equity section over here, which then puts us back in balance. So I know that was probably more than just working on the deposit, but you know, you could see how you can kind of figure these worksheets out, and hopefully that was useful and not overwhelming. So now let's unhide these cells, putting our cursor on column I, dragging over to CD, right click and unhide these cells, unhide. And so there we have it.